Hello and welcome. If you're even thinking about buying a high-end car here in the UK, your timing is absolutely critical. There's a huge tax shift coming that's about to completely change the cost of ownership, especially for electric vehicles. To help us all make sense of it, the experts at My Tax Accountant have put together this fantastic discussion, and we're going to break down exactly what you need to know. So let's just jump right in. Are you in the market for a new luxury electric car? Because if you are, you need to know about a hidden cost that was just announced in the November 2025 budget. And honestly, it's a game changer. This has nothing to do with the price you see in the showroom. We're talking about a fundamental change to the day-to-day cost of actually driving an EV in the UK.
So here's our roadmap for today. First, we'll look at why the UK's luxury car scene is such a global powerhouse. Then we'll dig into the multi-billion-pound problem that basically forced the government's hand. We'll break down the new EV charge itself, figure out what it really costs you, and then explore what this all means for the market. And most importantly, we'll wrap up with what you can actually do about it, your next best financial move.
All right, let's kick things off with Section 1. Before we get into the nitty-gritty of the tax, we really need to understand what's at stake here. You see, the UK's luxury car sector isn't just about flashy cars, it's a massive economic engine, and that context is key to understanding everything else.
I want to start with just one number. £5.5 billion. That's what Britain's high-end car makers turned over in 2024. This is no cottage industry, folks. It's a massive pillar of the UK's entire economy, which is why any policy that touches it sends ripples everywhere.
And this is where it gets really interesting. Just look at the difference between how many cars they make and how much they're worth. These incredible brands produce only about 4% of the total cars made in the UK. But, and this is the amazing part, they generate a whopping 12% of the industry's total value. It's the perfect example of quality over quantity, and it shows just how vital they are.
And it's not just us here in the UK who love them. An unbelievable 9 out of every 10 luxury cars built here are shipped overseas. We're talking about global icons like Aston Martin, McLaren, and Rolls-Royce. These aren't just cars, they are global symbols of excellence. And this success story is only getting bigger. The market is projected to grow by a solid 6.7% every single year until 2030. So just to recap, we've got a booming, high-value, export-heavy industry. Now hold that thought, because believe it or not, this success is the very thing that's created the problem the government is now trying to solve.
Okay, now for the big problem. You see, the amazing shift towards electric vehicles, which is great for the planet, has accidentally created this giant multi-billion-pound headache for the UK government. Let's break down why.
So it all comes down to something called fuel duty. For decades, it's been a super simple and reliable way for the government to make money. Every time you fill up your car with petrol or diesel, a chunk of that money goes straight to the Treasury to pay for things like hospitals, schools, and roads. It's been a financial bedrock for generations.
But that bedrock is starting to crumble. And don't just take my word for it. This quote is straight from the government's own watchdog, the OBR, in their brand new November 2025 report. They're saying that as we all switch to electric cars, fuel duty income is going to collapse. It's set to fall from 0.7% of our entire national income down to just 0.1%. We're talking about a black hole worth tens of billions of pounds that has to be filled somehow.
And this chart just says it all, doesn't it? You see that line shooting upwards? That's more and more of us buying electric cars. And that other line that's just falling off a cliff? Yeah, that's the government's tax revenue. The two are on a collision course, and it's created a massive financial gap that the government has to plug.
So the government has this huge hole in its budget. What's the big plan? Well, the answer was revealed in the November 2025 budget, and it's a policy that is going to affect every single electric car driver out there.
So say hello to the new mileage-based charge. The idea is actually pretty simple. Instead of taxing you on the fuel you buy, the government is now going to tax you on the distance you drive. And this new charge is aimed squarely at battery electric and plug-in hybrid cars, the very vehicles that, up until now, got away tax-free.
This is a complete rethink. The old way was easy. The more petrol you used, the more tax you paid. Simple. The new way disconnects tax from fuel completely. Now, it doesn't matter how efficiently you drive, it only matters how far you drive. It's a straight-up switch from taxing consumption to taxing usage.
Okay, here's a quick pro tips section with the details you really need to know. First, this is a charge based on your mileage, not on just owning the car. Second, for now, it's only for cars, vans, lorries, other commercial vehicles,
They're exempt at the moment. And third, and this is the big one for your bank balance, this completely rewrites the math on how much an EV costs to run over its lifetime.
All right, so that's the policy jargon. But let's talk about what this actually means for your wallet. It's time to get into the real-world numbers.
Let's take a real-life example. Imagine a small business owner in London who drives about 10,000 miles a year. In their old petrol car, they were paying around £1,700 a year in fuel duty. When they switched to a fancy EV, that cost dropped to zero, a massive saving. But under this new system, if we use a sample charge of, say, 5 pence per mile, that same 10,000-mile journey now comes with a new tax bill of £500. The tax-free party for EVs? It's officially over.
Now, £500 is a big deal for one person. But what happens when you apply this logic across the whole country? Now stick with me here, because the government's own forecast of what this will do to car sales is, well, it's pretty shocking. Here it is. The government's own numbers predict that this one policy will reduce electric car sales by 440,000. Just let that number sink in for a second. The government knows that by making EVs more expensive to run, they're going to discourage people from buying them, and they've already factored that drop in sales into their economic plan.
So with nearly 500,000 fewer EV sales expected, what on earth does this mean for the car market? And more specifically, how will that world-leading luxury sector we talked about adapt to this much tougher new reality? Well, it creates a serious ripple effect. First, the total cost of owning an EV goes up, which suddenly makes petrol or hybrid cars look a bit more appealing again. Second, manufacturers have government targets to sell a certain number of EVs. If people aren't buying, they might have to slash prices just to hit their quotas, which will crush their profits. And finally, for the UK, this could seriously damage our competitive edge in the global luxury EV market, making it harder for our iconic brands to succeed.
And all of this leads to one massive, overarching question. The UK has committed to going green with our transport, but could this new tax, a tax designed to fix a money problem, actually end up creating an environmental one by slowing down the very transition it's supposed to support? Okay, let's bring this all back to you. We've talked about the industry, the policy, and the market. Now for the most important part. What does this all mean for your decisions, and what's your best move from here?
All right, let's just boil all of this down. The November 2025 budget is bringing in a new mileage-based tax for all electric cars. It's happening because the government needs to replace the billions it's losing from fuel duty. For you, the bottom line is that running an EV is about to get more expensive, and that's expected to cool the market down. The single most important takeaway is this. The math for buying a new car just got way more complicated, and that means getting professional advice is more important than ever before.
And of course, just a quick but really important note. Everything we've talked about today is for general guidance to help you get your head around these big changes. It is definitely not a substitute for financial advice that's tailored to you and your own situation. Look, to really navigate this new landscape and make the absolute best decision for your circumstances, you need personalized expert advice. The team at My Tax Accountant are the specialists in this field. They can guide you through all the implications of this new car tax and help with any of your other accounting needs. You can reach them on 0208-570-8531 or just drop them an email at info@mytaxaccountant.co.uk. Thanks for joining us for this breakdown.